on, guys? Julia here with Alpha Elite Wealth, and I want to talk about financial advisors. And I want to ask you the question, is your financial advisor actually an advisor? The truth is that not everybody really understands the difference between an investment advisor versus a broker. And one of the statements I often hear is, oh, I have a financial advisor or I have an investment guy. But what you may actually have is just a stock or mutual fund broker who's selling you different securities. And in reality, he or she may not be advising you on anything. It may only be selling you something for a commission. So in this video, we're going to take a look at and examine the difference between a financial professional who is a broker and one who is an investment advisor or a fiduciary. By the end of the video, you'll be able to determine if your advisor is working for you or for themselves. While the two jobs may seem quite similar to someone who doesn't work in the financial world, investment advisors and brokers perform vastly different roles in the financial services field. We're going to take a look at some of the similarities and differences between the investment advisor and the broker. And it's important that you educate yourself on the differences so that you know what questions to ask your advisor to see if you genuinely have a real financial advisor or someone only selling you financial products. This is going to help you choose someone who is acting as a fiduciary and with your best interest. First, we're going to start by looking at some of the significant key differences. So investment or financial advisors are paid a flat fee or percentage of the assets they have under management to advise clients on securities and or manage client portfolios. Instead of earning a commission based on a sale of a security or financial product, they're paid a flat fee in exchange for independent, unbiased advice, which is really what you want if you're going to hire someone to look at your portfolio or your retirement account or any other accounts that you may have. Brokers, on the other hand, are paid commissions to execute trades, buy and sell assets for clients, or place a client into a specific type of financial product. Their compensation is dependent upon the sale of a security or financial product. Brokers and investment advisors are also regulated by different entities and also require different qualifications and licenses to operate. The Financial Industry Regulatory Authority, or FINRA, regulates brokers, whereas the U.S. Security and Exchange Commission, or the SEC, regulates investment advisors. Advisors and brokers are also subject to passing different licensing examinations to act as either an advisor or a broker. Both professionals are legally prohibited from giving advice that conflicts with their client's needs. In other words, the investment must be suitable for the client regardless of how the financial professional is paid. However, there's a significant difference between suitable versus what is best for you. Suitability doesn't always imply a fiduciary duty, which I'll speak more about later in the video, so make sure you stick around. But for now, I want to dive more into the specifics when it comes to brokers. Back in the day, long before online trading and investing apps and self-directed accounts, accessing and utilizing a broker was usually just a luxury service that wealthy individuals enjoyed to invest their money. Individual investors typically had very little or no means to access the market or a trading platform to make any type of trades. So what would happen is they would place their orders using a licensed broker, usually over the phone, and in return, the broker would charge a healthy commission on the trade. However, the dawn of the web-based and discount brokerages throughout the country has drastically changed the role of the traditional broker. The traditional broker is quickly being phased out in exchange for the investment advisor who actually manages your assets. Those who want to trade on the stock market or in other securities no longer need to have a broker on speed dial in order to execute their trades. People now have direct access to make trades, often with no commissions. Numerous online brokerage platforms now are offering zero fee trades and zero commission trades. Many brokers will still execute orders for their clients. However, many have changed or just expanded their services to justify charging their still relatively high commissions. The commission-based model seems to be becoming a thing of the past, and if you really stop and think about it, is someone who's working on a commission acting in your best interest or their own? I think it's a pretty legitimate question, and clearly I'm not the only one who thinks so, because in June of 2020, the U.S. Security and Exchange Commission, or the SEC, ruled that brokers can no longer call themselves or market themselves as financial advisors or use any title that includes the word advisor. This is a huge step in the right direction, as brokers typically don't offer unbiased advice. Their advice usually stems from a particular security or product that they're trying to sell or promote. For example, if a broker works for a firm or company, they will often recommend only financial products that firm or company endorses, which may or may not be best for you and your goals, which is pretty concerning if you ask me. Now that I've talked a little bit more about brokers, you're probably wondering what exactly is an investment or financial advisor and how the heck am I supposed to tell the difference? Don't worry, guys, stick around. We're about to dive into what an investment advisor is, and I promise you by the end of this video, you will understand the differences between the two. So let's get into into it. Unlike brokers, investment advisors work for a flat fee or a rate. When acting as an investment advisor, one is not permitted to work for a commission. Investment advisors also have a fiduciary standard or fiduciary duty. This means that they are legally required to act in the best interest of their clients. Therefore, the investment advisor works on a fee-based system that allows them to give unbiased and transparent investment and financial advice, catered to the individual client needs, goals, and objectives. Investment advisors will also often manage a variety of investment accounts for their clients. For example, an investment advisor may work directly with their client to create an entire financial plan. This can include helping clients with taxes, estate, legacy, mortgage, college savings, and retirement planning. Investment advisors are registered with and regulated by the United States Securities and Exchange Commission, or the SEC, and sometimes by state regulatory body or a state securities commission. Investment advisors are also held to a much higher legal standard than brokers. In the United States, all registered investment advisors must adhere to the Investment Advisors Act of 1940. This act mandates that advisors must perform fiduciary duties in regard to their clients' accounts. As I mentioned before, a fiduciary duty is simply acting in the best interest of their client at all times. So an investment advisor is legally required to act in your best interest. A simple way to know if your investment person is actually an investment advisor is to simply just ask them, are you a licensed investment advisor? And you really shouldn't feel weird about asking. After all, it is your money, so you do have a right to know. Now that we've talked about the specifics about brokers and investment advisors and what their role actually is and what their job really is, let's talk about testing and licensing, because investment advisors and brokers have very different training, they have different testing, and they have different licensing requirements. Brokers take their exams through the Financial Industry Regulatory Authority, or FINRA, and investment advisors take their exams through the North American Securities Administrators Association. Brokers typically take Series 6 and/or Series 7 exams, depending on the types of financial products they want to offer their clients. Alternatively, investment advisors must pass the Series 65 Uniform Investment Advisors Law exam. This is a requirement before any investment advisor can provide financial advice for a fee. This exam is administered by the NASAA and is regarded by some as the most comprehensive and challenging exam offering for financial professionals. The right financial advisor, who is a true fiduciary, can help you meet both your short and long-term financial goals. They can assist you with retirement planning, investment selection, estate planning, and overall financial well-being. It's important to work with an advisor who's going to be your advocate and your ally, who's going to do what's best for you and not what's best for his or her own wallet. Like I said before, don't be afraid to ask a financial professional what exams they've passed, what titles they hold, and in what capacity they're acting when they're assisting you. After all, this is your hard-earned money they'll be managing and overseeing for you. Well, that's going to sum up our video for today. I really hope this video gave you some insight and understanding of the roles of a broker versus a true investment advisor, so that you can be sure you're working with someone who truly has your best interest in mind. If you did enjoy the video and find it helpful, please be sure to hit that thumbs up button and that subscribe button so that you receive notifications anytime I upload a new video. Thank you so much for watching, and I'll see you next time.